Sandip Sabharwal as well as Aditya Agarwal joining us on the show. Good afternoon, gentlemen. Thanks so much for making time and speaking with us. Sandeep, this market rally just continues to build on. One is just waiting for a dip to perhaps buy. Do you see that imminent, maybe after a budget, a sell-off is expected? Or do you think just deploy, don't wait for that dip at all?
Sense to wait. It doesn't like you can't buy stocks at all prices. So you need to buy, wait for the right opportunity. Now the opportunity will come. I think we are entering into a phase where the markets are going into a frenzied kind of up move, and eventually we'll see a sell-off come in. Now whether that happens next week, next month, very tough to predict the exact timelines, but I think it could also be correlated to a correction in the global markets, and that could also have a rub off in India. Because if we look at the results which have come out and the way markets have moved up, many things don't correlate. So I think right now it's a wall of money which is driving the markets. But then I think it makes sense to be cautious.
Okay, just looking at some of the other stocks as well, and Asian Paints too came out with its numbers. The revenue has seen a downtick of about 2%. PAT though has seen a downtick of 25%. EBITDA as well 20% lower. And clearly, competition has sort of eaten into the market share, although they did say in the commentary that there is some rural recovery which is seen taking place. But Sandeep, you think, the competition started when Aditya Birla did come out with its, or rather announced its paint segment itself, and you did see an ease off in Asian Paints since then. You think part of the damage is behind us, or is there more to go?
I think there's more to go. If when I looked at the management commentary from Asian Paints, they seem to be dismissing the competition from Grasim. I don't think they should be dismissing the competition from a company which has a widespread distribution network, strong brand image, and they have invested 10,000 crores to set up plants to manufacture paints. So they haven't done it just for the heck of it. They want to take a big market share. Whether they'll be successful or not, time will tell. But in the interim, in their endeavor to take that market share, they will definitely cause margin damage in the market. So I don't think that the worst is over for paint companies. I would think that we will still see valuation derating coming into the overall paint industry, including Asian paints.
Infosys. Ahead of numbers. I mean, Infosys used to be the most anticipated number, and everybody used to be in attention waiting for the Infosys numbers. Aisha, वो दिन गए, right? Infosys numbers, we all were in attention early in the morning.
I'm still in attention for all that.
Life hasn't changed.
Hasn't changed because I'm still as attentive to those numbers as any, because I'm hopeful that maybe things will turn around. But this quarter it should. People are expecting good set and good commentary from Infosys. Let's see whether they deliver.
But yeah, I remember traveling to Bangalore and anchoring out of that pyramid that they had for the media room.
No,
Those
it used
days
to be
are
this.
definitely
It used to be
behind
this
us.
quarterly affair where you would prepare 2 days in advance for the numbers, and it's like by heart the numbers, and then the numbers would come before the market hour, and the entire market, forget IT, the entire market would react. So Infosys comes and gives a profit warning. Okay, today's markets you can just ignore it. Infosys gives a profit surprise, then everything
because
is
it's become a lot more broad based. I mean, more than half of the index is now out of services, as in manufacturing and other things as well, which was earlier only banking and IT, has become a lot more broad based as well. So I think domestic economy is also something which is firing up, and not just the global one, which you kind of read through from Infosys.
Yeah, the breadth is increased, variety is increased, contribution is increased, and Infosys growth has come down.
Yeah.
And nobody is like, really saying that, okay, I remember there used to be a fund called Birla Advantage Mutual Fund. I'm not getting into who the fund manager was, but Sandeep, you'll remember. There are 2 holdings, which were 50% of the total corpus, Infosys and Satyam, right? Or Visual Soft, 3 holdings, I think, which was accounting for 65% of the holding.
Yeah, I think so. That was a period where so that was, I think, it was a telecom media IT. I don't know what it was called. I forget the acronym which was made at that time.
So, Sandeep, are we at that turn for IT where if you start buying now, the downside is limited and the upside could be higher than Nifty?
So I think that's the trade markets are playing right now, that the worst is over. Now, from whatever commentary and results I've read and whatever is coming through, the worst seems to be over, but then there doesn't seem to be any significant uptick in performance which is going to come in the near term. And the stocks have rallied, I think, 10 to 15% across the board in anticipation of this improvement in performance coming through. So I think Infosys, like they're guided for 1 to 3%. If they stick to the 1 to 3%, then from here on, what kind of upside we can see, I can't really see too much.
Point taken. On that note, let's slip into a very short break with the news that the market is holding out okay. On the other side, we'll get the LTI Mindtree management to join us. Well, IT is clearly firing up, and LTI Mindtree is one of the reasons for that. Good show as far as execution is concerned, even though there was a bit of a miss on margins. But they've also signed this deal with the APSA Group about the banking space in Africa. Let's welcome on board Sudhir Chaturvedi as well as the management joining us from the APSA board, Johnson Ediso. Listening to the conversation we had with them earlier.
This quarter for us, BFS returned back to growth with 2.6% quarter on quarter. And along with tech and services, BFSI and tech and services are 60% of our revenue. So a majority of our revenue returning back to good growth momentum. This is on the back of three things. Firstly, we are seeing that our clients have resumed, especially our banking clients, have resumed some of their high priority transformation projects that were paused during the last year or slowed down. Those are back on track and they prioritize the ones that they want to invest in. Which is really in the core area. So we see this as sustainable transformation spend. Secondly, we are seeing that clients are also doing vendor consolidations. And as part of the vendor consolidations, we've been on the right side of vendor consolidations. We've signed several new deals and master services agreements with clients, especially in the banking space. And that's reflective, and what we are here to talk about one today. And third, but last but not the least, clients are making foundational investments in AI. And especially banks and tech companies, tech services companies, are making those investments in a way that they can start to leverage AI across everything that they do in the organization. And those three tailwinds are the ones that have helped us grow this quarter, and why we also feel that this growth is sustainable.
That's interesting. Let me then listen it from the horse's mouth itself. Johnson, it's great to have you on the show to get the perspective from the client side as well, to understand how things are. Because for the last 12 to 24 months, this entire sector has been clouded by uncertainty, delay in decision making, etc. How have things changed for you in the sense, how are you looking at decision making when it comes to the IT spends?
It's a real pleasure to be here, visiting from South Africa. We're a Pan-African bank, so we operate across the African continent. We're in 11 markets. South Africa is our largest, but we go from West Africa and Ghana to East Africa. We are still investing heavily into technology. The spend is up 8 to 10% a year. Why is that? Very simply, the African continent is a young continent. The average age is 19. Most of our customers, and increasingly our customers, are clearly digitally native, actually. So for us, the investment in digital, in data and technology is something that we are continuing to drive. Clearly, we use it to drive top-line growth, and then also clearly we use it to make sure that our cost of service, incrementally, we can control so that we can bring more and more customers and we can drive more and more financial inclusion on the continent.
Okay, that's the word coming in from the LTI Mindtree management. In the meantime, just looking at some of the other names. Look at a HAL, look at an ABB right now. That's down about 5%. As the global parent did set out a warning, not quite correlated to what happens in the India business, but definitely a sentimental knee-jerk on the stock, down about 4.5% as we speak. Dixon is down about 4.6%. Siemens is down 5%. HAL is down nearly 5.5%. And Trent as well, down by about 6% or so. Sandeep, I mean, forget the longer term for the market, but come Tuesday and we'll have the budget. Makes sense to lighten positions, and are you anticipating anything big out of the interim budget this time or not?
Yeah, so the expectations are high that there'll be some tax relief coming through. Whether the government will deliver or not is something we need to see, because the next budget will be just, I think, 5 6 months down the line. So whether they do something now or that they decide to do it in at January end is something which we don't know. Tax relief for reviving consumption is absolutely essential, because consumption is one part of the entire growth basket which has been deeply lagging. In fact, consumption growth has been half the GDP growth, which ultimately cannot. So ultimately, GDP growth cannot sustain unless consumption revives. So that's something we need to see. Markets have been rising almost every day. This kind of frenzied rise will not last. So I think people who have a short-term orientation need to be very, very careful right now.
LIC is trending up smartly. I'm just looking at the screen, but in terms of the, what is this? MTNL is up 20%. Why? I don't know.
Well, I guess the reports that perhaps there is some going to be rehabilitation of that company or some merger, etc. on the cards. I think this stock moves on all of those kinds of news. So
MTNL is also up 18%. Why?
It's only 20 times jump in volumes for MTNL last 4 days. Average is 20 lakhs. Today it's clocking 14 crores, but on average 4 close to 5 crores.
You know, I've seen crazy moves in my life over the years, but there are some times when you've seen like a different definition of craziness, and let's establish that. Let's look at TTML from 2020, and you've seen in 4 years a boom and a bust and a comeback trail. Let's look at TTML. I don't track it. It's a Tata Group company. It's exited its fixed line business. Now that is TTML for you. From 2020, please. This is 2021. If you look at TTML 20, not 21, it was almost like a 20 rupee stock, and from there it went all the way up to 290 rupees. Kunal, do you have that numbers with you, like August 2020 or January 2000? I mean,
For
TTML, let's look at it. What was the low, COVID low for TTML?
1.8, I think I can see. March 2020.
2 rupees, right?
2 rupees.
2 rupees went to
Less
300
than
rupees.
2%.
Yeah, it went to 290.
Yeah.
That was the high.
100x for TTML in a matter of just 3 years. And from 290 it came down to 50 rupees.
50 rupees.
And 50 has become 96 again.
Correct.
Now what is coming? Please tell us.
I don't track this one.
it's one of those Vodafone kind of stories, right? I mean, obviously the stock was above $100 also at one point of time, dwindled to the levels of $10. Now
2
close to
rupees
around
became
16.
290. 290 came down to
Okay,
40.
2 became 290.
2 rupees
Oh.
became 290. 290 came down to 40, 50 rupees. It has become 95 again. Sandip Sabharwal, when it is difficult for us to find answers, we always look up to you. Please help us. TTML.
I think the answer to this lies with the punters who are playing this stock or God. I don't know anything about it.
What about Paytm, Sandeep? Has it moved beyond the image of just punters playing it?
Paytm, unfortunately, is a story where the future seems very, very hazy, because the only reason they were delivering all sort of profits last couple of years was due to their loan origination business. So as that comes under threat, and as the entire wallet business is under threat, so I don't know what's going to happen. I don't think it's going to be an easy journey for them.
Okay, not an easy journey for Paytm, but for our MCX is seeing quite a bit of jump in the trading session. So it's up almost 3% in the last few minutes itself. Let's pull up the intraday chart of MCX. Yesterday, remember, there was that ease of trading commodities which happened because Zerodha has also institutionalized some of the commodity trading mechanisms. So that might mean just more volumes for this entire entity and the commodities vertical. So that stock is higher. You also have Finolex Industries, which is reacting positively. Though Havells just came out with numbers. Let's see how that stock is reacting to its earnings, and Polycab is the other one. Aditya, any sense as far as some of these cable companies are concerned, Havells, Polycab, Finolex, etc.?
Good afternoon, Anisha. Oh, clearly, all these stocks have seen a sharp run up in the recent months. It's more of a consolidation that we'll see in all these stocks, be it a Polycab or a Havells or a Finolex. At current levels, they don't offer an excellent risk to reward to initiate a fresh long positions in either names. I would like to rather stay on the sidelines. If you're sitting on decent profits, not a bad idea to book out partial profits and sit on the sidelines. Maybe wait for a dip closer to about 1700 on Havells. If I talk about Polycab, maybe another 5 to 6% downside from here on 6,000 round is a good support area. So I'll not be in a hurry to get into any of these stocks at current levels. Wait it out for a correction, and that will happen very soon. Maybe next month we can expect that.
In the meantime, just looking at some of the other buzzers, and while of course the trend today remains with some of the IT earnings reactions, the jump in LTIM, the follow through in TCS, but other than that, and India Cements has perked up a good almost 10% now on the futures. There's Manappuram, which is holding out very well. Chola Finance is looking very smart indeed. There's of course Bajaj Finserv looking strong, ONGC, Unilever. These are all trends that you're foreseeing in the market right now. Sandip, are you with the FMCG trend? I know we've talked about some of the rural exposure plays, Dabur, etc. But have you added more in those names?
So I think the easier plays were Dabur and Hindustan Unilever. So they have now moved up. Now we need to see the actual results and commentary to see whether they can build on gains from here on also. Other stocks which had moved up earlier and where we need to look for better opportunities will be something like a Godrej Consumer or something like yeah, I would say Godrej Consumer, Jyoti Labs on the mid cap side. I think the trends we'll have to evaluate to see whether we can enter now.
Thanks, Sandeep, for joining us today. Appreciate your time on the show. But let me take the closing trade ideas from our technical experts. Aditya, what's the view on the market first up? And what are your top bets which you would recommend as a closing trade idea?
So it's more of a consolidation breakout that we're seeing in trade today. I won't jump on the markets, to be very honest. Maybe it's more of a stock and sector specific that we are looking at trades. IT is buzzing, FMCG is buzzing, few select cement stocks are buzzing. So maybe these are some of the pockets that I would like to continue to bet on, maybe a few large cap private banks as well. Apart from that, it's a very select market, and I would like to stay away from trading the indices, to be honest, because beyond 25,000, I don't see markets going too far away. Can see a correction all the way down to 24,000 and 23,700. Bank Nifty something that may inch higher, closer to about 53,000 on the upside. So banking index, if I have to play any index, I would like to go long there with the stop loss just about 52,200, 52,300. Maybe I'll go long for a target of 53,000. As far as trading ideas are concerned, I've got a couple of buy recommendations. One is Pidilite Industries. Again, from the consumer and fast-moving FMCG space, stocks are looking interesting. So Pidilite is something which is looking very interesting on the chart setup. Can test levels of 3,300 on the upside with a stop loss at 3,150. I would recommend a buy. The second stock is a Birlasoft. Again, like I said, IT is clearly leading the charge. So at current levels, one can go long on Birlasoft for a target of 800 with a stop loss at 725.
Right. Kunal, what about your strategies?
So I'll go with a buy on ONGC, a stock which I've been recommending over the last couple of days. Even at 325, 330 where it's trading right now, looks very strong. I think this could probably be potentially a strong trending move for ONGC, not just a breakout move.
Okay, point taken. For now, the Nifty continues to be above that mark of 24,800. No stopping the rally there. And the Bank Nifty too has managed to perk up quite meaningfully from the lows of the trading session. We're staring at a level of 52,666. Our last 30 minutes of trading session left. We'll track that when we come back.
If you like this video, then like, share and subscribe to ET Now.